Madam President, this afternoon there's a critical vote that's going to take place here on the Senate floor. It's one of the most controversial business-oriented votes that we have faced. And I would say that leading up to this vote has been one of the most heated debates and exchanges that many of us in the Senate have seen in our time. It relates to an issue that affects almost every American family and certainly all American businesses and the financial community. And it's a basic question that needs to be resolved on this Senate floor. My friend and colleague from Montana, Senator Jon Tester, is offering an amendment which I oppose. I have the highest respect for John. We have discussed this, and our friendship has remained strong throughout this debate. We just see this differently. And whatever the outcome of this vote, I certainly am going to continue my strong friendship with John and be a fan of what he brings to the Senate and what he does for the state of Montana. Joining him is Senator Bob Corker of Tennessee in this amendment. I have the same high regard for Bob, and I should say Senator Corker, and any remarks that I make today are no reflection on them at all. I think they're both honorable people who are standing tall for their point of view, which I happen to disagree with. But I do want to make it clear that I think this is an historic vote. It is a threshold vote in terms of whether the United States Senate, the Congress, and the government of the United States will step into a situation that has created a fundamental unfairness. And this is what the unfairness is. When we use debit cards, that plastic, to pay for a transaction, there is a fee that is collected. It is a fee that is paid to banks, and of course a fee paid to the issuing credit card network. The merchant or retailer who accepts that plastic, that debit card, has no voice in determining what that fee will be, and it is invisible. Just one floor below us here in the Capitol is a little carryout. And I went there this morning to pick up a little breakfast, and there was a young lady, a Capitol Hill policeman, in front of me, and she took a package of chewing gum and put it on the counter and handed her debit card to the cashier. The chewing gum cost $1.20. The average fee paid by the merchant, in this case, the proprietor of the carryout, is 44 cents on that transaction, more than a third of the cost of the pack of chewing gum. Now, the owner of the carryout had no voice in that fee. It was a fee that has been imposed on that merchant by the credit card network that issued the debit card. So a year ago, we took up this issue and said, is it fair or reasonable? Madam President, the reason I think we need to take a look at it is that in the United States of America, the so-called swipe fee is dramatically greater than virtually any other country in the world. The same networks, Visa and MasterCard, charge on average 1.14% on every transaction using a debit card. If you went to the European Union, the average debit interchange fee is 0.2%, less than a fifth of what is charged in the United States by the same credit card networks. And then, of course, take a look at Canada, just north of the United States, where there is zero interchange fee charged on debit card transactions. So why is the United States, through its consumers, small businesses, and large retailers alike, paying so much more? These credit card networks, through their issuing banks, are charging this because they can. There is no restraint whatsoever, or at least there wasn't until last year. We had a debate on the floor of the Senate, and we said, on behalf of consumers and small businesses, retailers, and merchants all across America, should we establish a reasonable fee for the use of a debit card. And we voted with 64 votes to do that. The fee is to be established by the Federal Reserve. Most everyone would concede two things. First, the Federal Reserve is not partisan. It is going to make this judgment based on the economics of the marketplace in terms of what the fee should be. And secondly, if there is any bias at the Federal Reserve, it is not a bias toward consumers. This is not a consumer protection agency, and no one has ever called it that. It is an agency which, by and large, is more comfortable in the boardrooms of major banks. And so we gave them this responsibility. And what they came up with after 5 or 6 months of investigation was a startling discovery. And that was that the interchange fee being charged on debit card transactions in the United States on average was 44 cents. That's what the 1.14% translates into, 44 cents a transaction. And that the actual cost to the debit card network issuing banks was in the range of 12 cents. So what is being charged to consumers and small businesses across America is more than 3 times the reasonable and proportional cost of the transaction. At that point, the Federal Reserve said, we're going to sit down as instructed by this law passed by Congress and signed by the President and come up with a reasonable interchange fee. And they confessed, Chairman Ben Bernanke and others, that it was a challenge, and it is. But they were going to do it and do it right, and they needed more time to do it. Chairman Bernanke called me and said, I need an additional 6 weeks or 8 weeks to do it. I said, well, I'm sorry to hear that. I was hoping we'd learn more sooner, but do it right. They had more than 11,000 comments that were posted at the Federal Reserve about what this debit fee should be, what is a reasonable fee, what it should be. And they are about to announce before the end of this month what it's going to be. I don't know what their report will say. I suspect that it will be somewhere between 12 cents and 44 cents, with many other provisos included. So that's where we stand. Under the law we passed last year, this new debit card interchange fee rule would go into effect July the 21st. Well, needless to say, it has generated a lot of controversy, particularly among the card networks, Visa and MasterCard, and the issuing banks that issue these debit cards. They don't like this at all. As Senator Dale Bumpers of Arkansas, who used to sit right back there, used to say, they hate this interchange fee regulation like the devil hates holy water. And they have done everything in their power to stop the Federal Reserve from issuing a rule which would bring down this 44-cent charge on every swipe of your plastic debit card. And, of course, they want to do it before the Federal Reserve issues their rule. And so today, at 2 o'clock this afternoon, on the Senate floor, the banks and the credit card companies get their chance. Get their chance to stop the Federal Reserve from coming forward with this new approach to the interchange fees. As you can imagine, it's a titanic struggle because of all the retailers and merchants in the United States. From Walmart on down to the corner bodega in Manhattan or a corner store in Chicago, they're all involved. When I get into the car that picks me up at O'Hare to take me to my apartment in Chicago, my driver says, we're pulling for you. Every time somebody gives us a debit card, we end up paying more and more because of it. The reach of these charges, I think, may surprise a lot of people. Here's a letter that we received yesterday from Tom Gordy. He's president of the Armed Forces Marketing Council. He writes to me and says, on behalf of the member companies of the Armed Forces Marketing Council, I want to offer our sincere appreciation for your efforts to curb the skyrocketing cost to retail business through debit card fees. Our particular concern about debit card fees is the adverse impact the fees are having on the pocketbooks and the quality of life of military families through the military exchange system. As you're aware, the military exchanges provide a non-pay compensation benefit to military families and support military families' financial readiness by offering name brand products at an average savings of over 20%. Additionally, the profits that we generate at the military exchanges are given back to the military community through dividends that support quality of programs on military bases, including child care centers, movie theaters, gyms, swimming pools, to name a few. Now, let's bring it right home to the debate on the Senate floor. Here's what Mr. Cordy writes. Currently, the three military exchange systems, Army Air Force, Navy Exchange, and the Marine Corps Exchange, are having to pay well over $100 million a year combined in interchange fees, and the interchange fees are, and I quote here directly, the fastest growing uncontrollable expense to the military exchange system. As interchange fees continue to increase, the military exchange systems must often absorb the cost, thus reducing dividends to support military quality of life, or must pass the cost of the fees to the military family by raising prices. Either way, military families lose because of interchange fees. One example, an example that should be close to home to us, because it's an example that reflects on the quality of life of some people we care for very much. Military families that sacrifice for this nation and a system which is designed to help them is paying over $100 million a year to the issuing banks for the Visa and MasterCard debit fees. Is $100 million reasonable? Is next year, if it's twice that amount, reasonable? Most people would argue that if you believe in a free market system, you believe in two things: transparency, so people know what the rules of the game are, the actual prices and cost, and competition. The honest answer is there's no competition here. Visa and MasterCard literally dictate these fees that are collected. And what choice does a merchant have? Could you stay in business in America today and not take plastic? Well, I guess some people do, but not many. The reality is more and more people are using plastic to buy things as basic as a pack of chewing gum for $1.20, which I just saw this morning. And that's where this debate comes down. So the question is whether or not we'll let the Federal Reserve issue this rule, take a close look at it, watch its implementation, and respond if needed. I don't know if their rule will be excellent or need help. I'm prepared to stay the course with it. If we need to address it in any aspect with further legislation, I want to do that. And I particularly want to address my friends, at least some friends that I have left in the banking community. I am not going to stand here in defense of Wall Street. I think they've had quite a bit of friendship and love thrown their way by this Congress over the last few years. I am going to say, though, that when it comes to community banks and credit unions, I think they deserve an exemption. It was included in the law, and if we need to provide any other reassurances after the rule is issued, I'll be there. And I believe I can speak for the merchants and retailers. They'll be there as well. They have never disputed this issue of the community banks and credit unions being treated differently than the big banks. But I do want to make it clear what is going on here in terms of the biggest banks that issue these debit cards. $1.3 billion a month is collected in debit card interchange fees. $1.3 billion, more than $15 billion a year. Three banks, Bank of America, Chase, and Wells Fargo, control 50% of the debit card market, and they will collect nearly $7 billion in fees this year off of these debit cards. As I mentioned to you, the merchants and retailers have no voice in this. They pay what they are told they have to pay, and they collect it from consumers. Now, Jamie Dimon is a person I've known. He is the CEO of Chase Bank. I have worked with him when he was in Chicago. I have had many conversations with him when he moved back to New York. I respect him for his business acumen. But he has been particularly pointed in going after this regulation of interchange fees. He has called it idiotic in letters to shareholders and his customers. And Chase has written to all of their debit card customers across the United States and said this so-called Durbin amendment, it incidentally isn't an amendment anymore, it's a law. This law will mean that Chase will have to raise fees on the people holding debit cards because they will collect less from debit card interchange fees. Well, it seems to make sense, doesn't it? If less revenue is coming in, that they'll make it up some way. But I want to call the attention of those following this debate to this fact. The bonuses distributed by the banks on Wall Street last year amounted to $20.8 billion. If they lost every nickel in interchange fees on debit cards, it wouldn't even get close to the amount they paid out in bonuses to their executives. So before Chase Bank, I don't want to be personal about this, before the Chase Bank threatens its customers about increased fees and reduced benefits, let them be honest with their customers about the bonuses that are being paid. That bank, Chase, if I'm not mistaken, had an increase in annual earnings of 48% this year. They're doing quite well, thank you. And for the record, let me remind those who are following this debate, the taxpayers of America were asked to stand by these banks in one of their darkest hours. When we faced this recession, and many of us believe it was brought on by some awful practices on Wall Street and among other banks, insurance companies, and financial institutions around the world. In their darkest hour, when things were toughest, where did they turn for help? Not the good old free market system, but the Treasury of the United States of America. And so in the end, we gave $25 billion to the Chase Bank. We gave $45 billion to the Bank of America and $25 billion to Wells Fargo to help them through their time of need. Oh, sure, they survived, and they paid us back. But what was their gratitude? How was it reflected? It was reflected by these banks, after receiving taxpayers' money to get them out of the hole that they dug for themselves, turning around and awarding bonuses to their executives right and left. That's not an expression of gratitude where I come from. And now they come to us and say, we want you to continue this subsidy, this interchange fee subsidy, 50% of which go to the three largest banks in the United States of America. Well, I think it's time for us to say no. I think it's time to stand for consumers and small businesses across America who have no voice, no power, and deserve our help in making this system fairer, more transparent, and more competitive. Now, the amendment before us is one that I want to address specifically, because instead of letting the Federal Reserve issue their rule at the end of this month, measuring whether its impact is as we had planned, responding if needed to changes, what the banking community and the credit card networks want to do is to kill this rule literally in the cradle before it has a chance to be issued, before it has a chance to be implemented. I think that's just plain wrong. Right now, I hear my colleagues who come to the floor offering this amendment, both Senator Corker and Senator Tester, saying, this is a compromise. This is a compromise. This is not a compromise, because a compromise involves sides with differing views sitting down together and working out their differences. I wasn't invited to any meeting to come up with this so-called compromise. The merchants and retailers, the businesses across America were not invited, not at all. There were no representatives of consumers in these meetings for this grand compromise. This was a compromise between the biggest banks, the medium-sized banks, and the small banks. So it is a banker's compromise for bankers' benefit. That's what it comes down to. In the last 2 days alone, letters opposing this amendment have been sent by consumer groups, military exchanges I mentioned, 11 colleges and university associations, because incidentally, our kids at college bookstores using debit cards are actually paying more for their books because of these fees as well. 308 national and state merchant trade associations and 6,500 small businesses, all opposing this so-called compromise amendment. It isn't a compromise. Secondly, this amendment is described as a one-year delay of the interchange rulemaking. Actually, it's an open-ended delay. The bankers who wrote this very carefully crafted it. The amendment requires the Federal Reserve's rules to be rewritten in 1 year, but it doesn't set an effective date for the revised rules. There's no telling when, if ever, these rules will go into effect. This delay could be significant. And from the bank's point of view, the longer the delay, the better. What's it worth? $1.3 billion a month for every month they can delay it. How long would they like to delay it? Forever. And let me tell you, this idea of needing a study after putting 12 months, the Federal Reserve put 12 months into reviewing this issue, considering thousands of comments to promulgate this rule. The amendment sets up a study of the interchange system that only takes into account the views of the banking regulators. Search the amendment, the Tester-Corker amendment, for one indication that there'll be anyone sitting in the room representing the consumers or small businesses of America for this study. Not invited, not welcome, not part of the conversation. Is this another compromise? A compromise that just involves banking regulators sitting down to decide what's in the best interest of consumers? Would you want your fate left to their hands as a consumer? Not me. The study, incidentally, is loaded. The so-called triggers in the study, if you take a look at them, if the bank regulators deem that any of the triggers are met, they have to throw out what the Federal Reserve has done and start over. Well, guess what? The triggers are written in a way that this is a foregone conclusion. These triggers will be met. And as each trigger mirrors public statements the public regulators have already made about the Fed's draft rules, this is loaded. There's nothing objective or unbiased about this whatsoever. The amendment essentially mandates a complete rewrite of the federal rules by the banking regulators for the banking industries in favor of the banks. Now, let me tell you something else that's, I think, outrageous about this. What the banks have said is we don't want to measure the reasonable and proportional cost of a debit transaction to establish the fee that we're going to impose. We want to include every variable and incremental cost that we can consider. And this amendment goes on for more than a page with all the possibilities. The amendment provides that the Fed must rewrite the rules under a very different standard than the law which currently exists. And the new standard is one that the big banks have been begging for. The Durbin Amendment says that fees set by Visa and MasterCard on behalf of the big issuing banks have to be reasonable and proportional to the cost incurred that are, quote, specific to a particular electronic debit transaction, end of quote. Now, the Tester-Corker Amendment would require the Fed to let Visa and MasterCard fix fee rates to cover bank costs that are not specific to any debit transaction. The Tester-Corker Amendment requires the Fed to allow interchange fees to cover, quote, all fixed and incremental costs associated with debit card transaction and program operations, including incentives. This is a truck-sized loophole the banks are begging for because they know they can get up to 44 cents and beyond if they can add everything in from the cost of an ATM machine to executive compensation and executive bonuses. So honestly, are we going to stand here and say we cannot protect small businesses across America struggling to survive from outrageous price fixing by the credit card companies so that we can reward the issuing banks with bonuses? Is that what this is about? If it is, it's a pretty stark choice. This amendment is a big bank windfall. The amendment has been described as an effort to help small banks, but it would undoubtedly be a windfall for the nation's largest banks. It would give them a free pass to continue their anti-competitive practices for at least another year. And then it would require the Fed to write rules in a way that would enable big banks to justify the fees they're charging today. It is a no-change amendment. If you believe, as a member of the Senate, that the current system is fair to businesses across America and we shouldn't change it, then voting for this amendment will guarantee your position will be enshrined in law. This proposed amendment is a gift to the big banks that will keep on giving and denies swipe fee relief to small businesses and consumers who desperately need it. Madam President, I ask unanimous consent to enter into the record these three letters that I've received from the Armed Forces Marketing Council, the American Council on Education, and Public Citizen U.S. PIRG.
Without objection.
Madam President, the groups that stand behind me on this effort know what we're up against. When you take a look at the most powerful special interest groups in Washington, you have to put the banking industry near the top, if not on the top of the ladder. Throughout my career, I have tackled them on the floor. I can recall many years ago, brand new to the Senate, when I said that we ought to change the banking laws so that we would put an end to the so-called subprime mortgages. And I was in a debate with Phil Gramm of Texas, who said at that time, if the Durbin Amendment passes, it will be the end of the subprime mortgage business. I lost by 1 vote. If I would have prevailed, history might have been a little different. The subprime mortgage mess created an economic downturn that we still suffer from. I stood up as well when it came to this foreclosure crisis and said that at some point these banks have to be reasonable. You just can't take homes away from people, board them up, and watch them deteriorate into nothing. You've got to give people a fighting chance to stay in their homes. And I said at the end, the bankruptcy court should have the last word on that. The banking industry, the credit unions, the community banks oppose me. Take a look across America today at the foreclosed homes in Chicago, in Aurora, in Springfield, all across my state and across this nation. The outcome, years after I lost that battle, certainly doesn't speak to a stronger America because of these foreclosures. The banking industry beat me on that. Well, last year, fighting for these small businesses and retailers, I stood up and said, somebody has to step up here and argue there ought to be fairness in the fees that they charge to businesses and consumers across America. And we rallied 64 senators, a bipartisan group, in support of that. Well, the banks want a second run at this. They want to take this game into overtime. They want to come back today and count their friends here and hope they can come up with 60, in the hopes that if the big banks and credit card companies can win this battle, that we'll leave them alone. We won't ask hard questions about the interchange fees that are charged. I'm asking my colleagues in the Senate not to give the banks this overtime, extra time victory. Give a victory to consumers. They have precious few on the floor of the U.S. Senate. Stand up for small businesses that do create jobs across America and give them a chance to create jobs in this country by not being overcharged by the credit card networks and the biggest banks in America. How many of us have come to the floor and said small business is a key to economic recovery. If you believe it, if you mean it, vote against the Tester-Corker amendment. That amendment is a blow to small businesses and large alike, large retailers and merchants alike, all across the United States of America. They stand in support of my effort to have a reasonable interchange fee on debit card transactions and to make sure that they have a fighting chance to be profitable, to expand their businesses, and to hire more employees. That would be good for economic recovery. A vote for the Tester-Corker amendment, unfortunately, will be a win for the banks at the expense of an economy that desperately needs our help and support today. Madam President, I yield the floor.